Good day and welcome to the Old Mutual Smooth Bonus Quarter 3 2025 update. My name is Sam Zozi and I'm delighted to discuss how markets performed this quarter and, more importantly, how our portfolios have continued to deliver for investors despite the shifting global landscape. We will kick off by looking at a brief market update, delve into the investment objectives of the absolute growth portfolio, and with that understanding of these objectives, we'll run through and focus on the performance numbers to end quarter 3 and then conclude. What are the key notable market developments in the third quarter of 2025? The third quarter saw a shift in tone from global central banks. In the US, the Federal Reserve resumed its rate cutting cycle, cutting interest rates by 25 basis points, a signal that growth is slowing but inflation remains sticky. While tariffs pushed prices higher, job creation also softened, and political uncertainty rose as the US government shut down at month end. Global growth remained resilient despite the tariff headwinds. Lower rates, a softer dollar, and heavy AI-related investments kept markets supported. Back home, the Reserve Bank kept rates steady at 7%, choosing caution as inflation cooled to 3.3%. For smooth bonus investors, this global-local balance is positive. Falling global rates support asset values, while steady local policy anchors long-term stability, both helping to sustain the consistency of our portfolios that they aim for. But how have markets benefited from this benign economic environment? Equity markets extended their strong run through the quarter. Locally, the Johannesburg Stock Exchange delivered an impressive 12.8% for the quarter and 28% over the last 12 months, well ahead of inflation and cash. Resources were the standout, with platinum and gold stocks soaring on the back of record-high metal prices. Policy uncertainty pushed gold to new record levels and closed above $3,900 per ounce. This means that gold has delivered an impressive 50% in one quarter and an incredible 121% since the start of the year. Bonds also performed strongly, delivering equity-like returns but with lower volatility. On the global front, global shares gained over 4%, with technology and AI themes powering performance. This performance lifted the 12-month performance to 17% in rand terms, and emerging markets were also not to be outdone. They actually went up 5% in the quarter, led by China and South Africa, resulting in a 12-month performance of 17.3%. For our portfolios, this environment is ideal. High exposure to growth assets meant the AGP Smooth and the AGP Stable portfolios fully participated in the upside, while smoothing ensured volatility remained contained. Before we unpack performance of the portfolio, let's revisit what this portfolio is designed to achieve. The Smoothed Bonus range is built to grow your most valuable asset, which is your retirement capital, while protecting it through every market cycle. It aims to deliver inflation-beating returns of CPI plus 4.5% all the way to 7% over the long term, using a high growth strategy with around 83% in growth assets. At the same time, the smoothing technology cushions short-term volatility, turning the ups and downs of the market into a steadier investment journey. For investors, this means reliable long-term, reduced drawdowns, and confidence that your savings stay on track, even when markets shift. Over and above this robust risk management strategy, we also use our strong balance sheet to ensure that your most valuable asset is guaranteed or will never drop below the 80% and the 50% for the absolute stable growth portfolio and the absolute smooth growth portfolio, respectively. Zoning in on the underlying portfolio, which is the engine that drives long-term performance of our absolute growth portfolios, this is a well-diversified balanced fund with significant exposure to growth assets well above 80%. with an unmatched 11.5% exposure to local and global alternatives, making sure investors participate in both listed and unlisted markets. These asset classes combine to generate well over inflation plus 6% over the long term. And it is over these returns that we employ our smoothing technology. With that philosophy in mind, let's look at how the portfolios have performed in quarter 3 of 2025. Both the absolute smooth growth portfolio and the absolute stable growth portfolio delivered solid quarterly returns of 3.11% and 2.99% respectively. Month-to-month results remained steady, consistent with our long-term focus on stability and growth. For you as an investor, this demonstrates the benefit of smoothing, capturing the upside in strong markets while keeping performance smooth and predictable. These short-term numbers feed well into our 12-month returns of 12.27% and 11.76% for our AGP smooth and AGP stable iterations. These numbers are well ahead of inflation targets as depicted by the gray shaded area, which shows the inflation targets of between 4.5% to 7%. This strong performance is expected to feed through and lift our medium-term and long-term performance numbers in line with the recovery in the market. For Smooth Bonus members, it confirms that the strategy continues to meet its mandate: steady, inflation-beating growth with controlled risk. The current bonus smoothing reserve range of between 10 and 15% is a reflection of how strong our underlying portfolios have performed in line with the recovery in the investment markets. But what does it mean in practical terms? This means that the portfolio's underlying assets have performed well above their long-term inflation targets. These reserves act as a buffer, storing some of today's outperformance to support future bonus declarations when markets slow down. We last saw reserves levels this high in late 2021, just before global volatility returned. Back then, those reserves helped protect investors through subsequent market downturns. For investors now, it's a reassuring sign. Current reserve positions the portfolio to sustain robust bonus rates going forward. To further test how well the portfolio has met its objectives, let's take a closer look at how the portfolio has delivered on the dual mandate of delivering long-term inflation-beating returns at a much reduced volatility level. There is no better way to look at this than at a risk scatter plot over a sufficiently long enough time to deduce meaningful results. The graph on your screen at this point in time looks at what is the return that the portfolio has achieved over the last 10 years. But most importantly, what level of volatility was experienced by investors in pursuit of those returns. What we can deduce from this graph is that relative to other market-linked Regulation 28 portfolios, the absolute growth portfolios have taken 4 times less the amount of volatility to deliver more or less the amount of inflation-beating returns over the last 10 years. This is good news because it simply means that in the fullness of time, the portfolios have delivered on their mandates. As investors, you can have full confidence that the retirement assets are compounding steadily without the sharp shocks of the market. In conclusion, as we close the third quarter, the message is simple. Markets remain volatile, but our smoothing philosophy continues to deliver consistent inflation-beating returns. Strong reserves, disciplined risk management, and diversified growth all position the portfolio well for the months ahead. For Smooth Bonus investors, the story of quarter 3 is one of strength and stability, growth with peace of mind. Thank you for joining us for the Old Mutual Smoothed Bonus Quarter 3 update. As always, we remain committed to managing risk, capturing opportunity, and helping you stay confidently invested through every market cycle. Take care.